You are listening to the Critical Mass Radio Show, Orange County's business talk show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
Hello and welcome to Orange County's longest running business talk show. And yes, I am your host, Rick Franzi. And do we have a good show planned for you today? Why do you ask? Because Frank Campbell is our guest. Frank is an author. We're going to talk about that a little bit, but he's also the founder and president of his own firm, Stratus Financial Partners. Frank, welcome to the show.
Rick, thank you for inviting me.
I'm excited to have you here. Let's kick this off with your origin story. So Frank, take us back in time. Give us a sense for the inspiration and possibly the motivation for you to launch your firm.
I was enjoying a happy retirement, but I felt there was more I had to give. And I wanted life insurance. I want every life insurance policy to be the best policy it can be. And sadly, most of them aren't. It's complicated, it's unpleasant, I thought I could do a better job of helping people understand why they're sending that money to the companies every year.
Did something happen in your personal life that caused you to have this awareness, or how did you come to this realization about life insurance?
I got out of college and went to work for Prudential. And at the time, all they did was life insurance. So I learned it from that way. So I've been involved in life insurance for decades.
So Frank came to our attention through a common person that we know, Jason Duncan, Miller Farm Media, made this introduction. So we're always looking for guests that have a story to tell. If you know someone, if it's not you, but you know someone, please introduce us to them like Jason did for us with Frank. So since you've launched this venture, Stratus Financial Partners, have you learned any lessons? Have you had any pivots to the business? Has anything changed from your original idea of what you were going to do?
Oh my goodness, yes.
Okay.
But the pivot, Rick, suggests that I changed my focus, and we're very careful about maintaining our course and what we do for folks. So in that sense, not a pivot, but the shock was just how steep the curve was to create this in a way that we could translate things into English for people and do it inexpensively. And so we put together software and basically putting together software and procedures and making them all link took a long time.
Yeah, the devil's in the details.
Now you tell me. I understand.
I've heard that, and I kind of, as an entrepreneur, I sort of have what I call Franzi's law, which is any new idea or business idea will take you at least twice as long to get the value of what you think it's going to be, and it'll probably cost you at least twice as much of an investment as you originally had anticipated.
I think that's probably very accurate, but in my experience, once you crest the hill, it's joyful.
Yes, it's worth the climb, but it is a climb, and that's why I like when I have founders on the show to kind of go back to the beginning and the pivots, because Frank, most, if not every guest that I've had on the show that is a founder of the business has had some level of pivot in the early days of the business. It's Mike Tyson used to say, everybody has a plan until they get punched in the mouth. And it's kind of a graphic example, but it really, in business, you can have the best business plan you could possibly come up with. And I think that's important. But until you get in the market and you get some signals back from prospects and the clients, you don't really know what you have, do you?
Right. And I'm pleased with the results.
Let's talk about your firm. Tell me, who do you help? What's your niche? What problems are you solving for those people? And who gets the most benefit, ROI, if you want to think of it that way, from working directly with you, Frank?
Okay, well, I guess first of all, I help individuals, I help businesses, and I help other professionals, attorneys and CPAs, take good care of their clients. I do things in a different way. And the main problem I solve, Rick, is that 80%, 88%, but let's round it down to 80 just to keep it simple. 80% of life insurance policies are never going to pay a beneficiary. It's been that way for decades. It still is, and we can change that. So we put together the procedures and the processes to make that available. And that's really our focus is I want every policy to be the best it possibly can. And then it changes the numbers because instead of insurance companies 8, beneficiaries 2, when people take advantage of our policy audits, it flips it. And then it's beneficiaries 8, companies 2.
So I got one or two follow-up questions for you. So
Good.
Do you sell insurance?
I do. That's one of the hats I wear.
Okay.
Well, can I qualify that?
Yeah, it's your show.
I don't like the idea that I sell insurance, but when we identify a need for insurance, and then I can help people acquire the best policy for the situation. That's different than selling.
And you've had a career in this industry, it sounds like, as you said, when you were getting started, you started with Prudential, which is a very recognized name. In full disclosure, I have several policies with them of different kinds, all around the life policy. So I understand the Rock of Gibraltar, I believe, is part of the logo. So yes,
I saw that one time from the conning tower of a submarine.
Really?
That's a different topic.
Hey, we have a ranging conversation here on Critical Mass Business Talk, so Frank. We want the whole cast to be here, not just the entrepreneurs. So
okay. Well, I had no idea when I saw the Rock when we were entering the Straits of Gibraltar that one of these days I was going to be working for the company I thought Walter Cronkite owned.
So, did you say from a submarine?
Yeah, in my early years, I was a crew member on a submarine for 3 years.
So, I've got to divert for a second, ladies and gentlemen. Please give me an indulgence. No, that is such an interesting choice because you weren't forced into that line of work, were you? I mean, you chose.
Oh no, no.
You chose that life.
I was 5 years old, and I started absorbing it. And when I went in the Navy, there was no question that I was going to volunteer for submarines.
Why?
I just wanted to do it. Quick story. I'm 6'6", and 6'6" is the height for submarine qualification. Well,
the maximum height.
Yeah, you're not supposed to be over 6'6". Okay. Well, I'm probably a little bit over 6'6", but in my draft physical back in those days, the guy didn't want me to get a deferment, so he pushed me down and said I'm 6'5". Okay, so now if you get my Navy records, I'm 6'5". Now I'm in basic training, and the guy comes up giving us the pitch on submarines, and how many of you men want to join submarines? And I raised my hand up real high, and the guy next to me said, Campbell, you can't do that. You're too tall. I said, no, I'm 6'5".
I've been told I'm 6'5".
And the next thing you know, I wore one. Yes.
Wow. That's amazing. That's I can only imagine. We'll have to go offline sometime and have a conversation about that. It's a fascinating way to spend your service underwater like that. I admire that.
Oh, thank you.
So
sorry to take you off track like that.
No, we are flexible. We're nothing if not flexible here on the show. So I made a note here from when we were talking earlier, and I just want to kind of reflect on it because you said something that I definitely wanted to bring to the conversation, which is that many beneficiaries face financial ruin due to the outdated policies or maybe missing details. So I need some. That's fascinating to me and a little distressing, but I'm wondering if you could share some real world examples of this, and then how to be proactive so that this isn't anyone in my audience. So let's start with, why is that the case that they face financial ruin, and what's the outdated policies or missing details that you find?
Rick, the big difference is that in the old days, life insurance policies had unconditional guarantees. You pay this premium, and we're going to pay that death benefit. Your heart stops, we pay the check.
Okay.
But back in late 80s, the policy design changed, and now most policies have conditional guarantees.
Hmm.
And so if it does this, and if we don't do that, then it's going to pay. So if I may, I have two examples for you and a
Yes.
caveat.
Okay.
The first one's individual. Dad buys a policy for $1 million for his wife because she needs the money if he's not here. The illustration clearly says you pay this payment for 4 years, and then you don't have to worry about it again. So he pays the 4 years, puts it in a drawer and forgets about it, not being aware of those conditional guarantees. And then the thing starts running low on gas. So now flash forward 14 years. He's in hospice. And he gets the letter. And the letter from the insurance company always says, "Dear Dad, you may not be aware of this, but the policy just ran out of gas. And if you want to continue the death benefit, you need to send us another $4,000 right away." Dad's in hospice. He can't handle that. Mom's never been involved in that. But now she calls the 800 number and says, "What does this mean?" And she gets 80% of the picture, but it's cloaked in jargon, and she's confused and ends up in analysis paralysis. The policy lapses. It stops before Dad does. There's two places we could have helped. The first one is anytime over that 14 years if Dad had taken advantage of our policy audit service, we would have identified the fact that things not getting the mileage it used to, and here's what you need to do to keep it in place for Mom. And critically, Rick, at the very end, Mom had nobody to give her sound advice, complete advice, which was pay the premium. Had they taken advantage of our policy audit, then Mom would have been getting a check instead of looking for an attorney. It's a shame.
So I'm going to let you give your other example in a minute, but
Yes,
I
sir.
want to clarify. When you say run out of gas, does that mean the investment returns in the fund wasn't enough to pay the premium?
Right. If we get a 5% rate of return, and if we don't raise our internal costs, which is trendy in the industry now,
Okay.
then if I can use a car analogy, you're going to get 35 miles to the gallon and you're going to be fine. But if it suddenly starts using more gas and you're getting 25 miles to the gallon and you didn't know it, you didn't know what you didn't know, and it runs out of money.
Well, my father passed away due to an accident in 1987, and he was just 60 years old, like the day after he turned 60. And they were great health. He was an accident, and I was very impressed with Prudential because they had a couple policies, but like there was no issue. They were the first to pay. It was really a great experience.
Yes, that's the company that I worked for 32 years.
Right. And frankly, from that experience, that's the combination of my dad losing his life due to an accident and the way that I saw Prudential respond. We've been Prudential customers, my wife and I, since then, because I trusted that they were what they advertised themselves to be, which was when we needed them, they paid my mother, which was
exactly. Yes.
What you expect. So do you have another example of
yes.
Okay.
I have a business for you. And the business owners, you and I are the business owners, and we have a buy and sell agreement. And we each have $1 million policy so that we can pay each other if the worst thing happens.
Right.
And one day it does. I'm gone. You now owe my wife, oh, no, not $1 million, because the buy and sell agreement has a valuation in it that we didn't look at. And it turns out that my interest in the business now is $3.75 million. That's what you owe my wife. She's going to be looking forward to it. Okay? Now you have $1 million for the down payment, but what do you do for the other $2.75 million? We have a well-run business. It's profitable. You go to the bank and they'll lend you the $2.75 million at 7% interest these days. Okay. And then you get to start paying the interest of 7% plus the principal. Had we taken advantage of a policy audit and somebody who really understood these things, he could have told us that, look, the bank's going to charge you 7%. You can get that whole 3.75 million covered for 3%.
Mm.
I like to think of it as interest. It's really just the premium payment. But at that point, we get the policy. It's much, with all due respect to my many friends in the banking industry, in that situation, my money is much cheaper than theirs.
Yes.
And then you'd get the whole, well, you wouldn't pay the 3.75 million though, Rick, because Prudential or the other company, the insurance company is going to pay the principal, and you already paid the interest. So now the business can continue on, and my wife isn't going to be bugging you for a check next month.
Right. Or you're burdening the business with that extra expense now to pay off.
Terribly burdening. Yes.
Yeah.
Changes outcomes.
Yeah.
And then the caveat for businesses, the Supreme Court came up with a decision that was very harmful for business-owned life insurance last year. So if you're a business owner and the business owns life insurance, you should have somebody look at it that knows what they're talking about to advise you.
Because that's a very common way people fund their buy-sell agreements is through
exactly
a policy. Yes.
But it's going to bite them, and they could end up paying a lot more tax to the government than they think.
That's interesting because, okay. Yeah, I wasn't aware of that. I guess I was under the misunderstanding that proceeds from your life insurance policy is tax-free, but that's maybe on a personal basis then.
Well, that was fine until the Supreme Court said yes, but now it gets included in your estate in the value of the business.
Oh, okay.
So a $5 million business with a $5 million policy just became a $10 million business. It's ugly,
right. Okay.
Ugly.
Interesting. I did not know that, and that's something that people need to know. And there's so much complexity. I think we said earlier, the devil's in the details, Frank. So I get it. You know, you talk about the buy, sell, and evaluation. I know of a specific real world example of someone, a business owner that I know of, who 3 of them, and one of them passed away unexpectedly, usually not predicted. And it really, there wasn't enough funds set aside for to buy the wife of the deceased partner out. And it really caused a lot of problems for them. And it sort of broke the relationship with the spouse because she didn't understand. She understood business, but she didn't understand why they couldn't come forward with the money that she felt she was entitled to. So it was like that for everybody.
I like to anticipate all problems prior to their occurrence, Rick.
Yeah, that's always good. Yeah. Were you a Boy Scout too? What's going on over there with you, Frank?
I don't know. I might have
So
learned
do you
that
have
maybe.
do you have a piece of business advice that somebody gave you that you could pay forward and share with my audience today?
Well, when I came out of retirement to start this business, all my colleagues and my peers told me I was crazy. Nobody would want to do this.
Okay.
And they're right. But I've always said, somebody I respected said, stay true to your objective and put the client first. And that's the way we operate here.
I was writing that down. I've been asking that question, a version of the best advice for a couple of years now, and I have yet to hear the same answer twice, Frank. And we do about 100 shows a year, so it's fascinating to me that what people find valuable and pay it. Thank you for paying it forward. Yeah, I kind of want to maybe come back. Well, definitely come back to your business, but can you share for the audience maybe what are the key action items they can take to ensure the beneficiary designations are accurate and up to date?
Rick, I wrote a book, an ebook. It's on Amazon now. We may see a picture of it later, but the title is How to Do a Proper Policy Review. No Beneficiary Left Behind. I think I wrote the book on policy reviews. Okay.
Uh-huh.
And I gave away all my good stuff right there in the book.
Okay.
And it's an easy read, but it's got all the important things on there that you need to have somebody watch out for you with.
So I know Haley's going to bring that up here in a minute because it has your contact information and a QR code. So we're going to bring, not quite yet, because I want to deviate a little bit from what you and I kind of plan to talk about, and that is, and if it's off script too far, you can tell me. We won't go there, Frank. But we're focused here on death benefits, life insurance, but a lot of business owners get incapacitated before they die. And they're all focused on dying, but they don't realize they have a greater likelihood of being unable just to perform, but they're not dead yet.
Yes.
From your experience in this industry, are there packages, programs, products that people should consider for that case as well as in life insurance?
Rick, you're a busy person. You're generating revenue. You're working hard to do all of that. And people don't pay attention to the fact that you're 3 times more likely to be disabled before age 65 than you are to die.
So that's what
3 times.
3 times? Wow.
And I can't tell you the hundreds of buy and sell agreements I've looked at over the years where they funded the life insurance, sometimes begrudgingly, but they did it.
Right.
But there's also a clause in there where if I become disabled, I'm not contributing to the business anymore.
Right.
And there's 2 different disability policies that will pay me and pay you. And it should be part of every buy and sell agreement, but people get concerned about what they're paying and they lose track of the value.
Well, there's a saying, penny wise and pound foolish. I don't know if that's Ben Franklin or not, but I think it might have been. But I think in this case, an ounce of prevention, or maybe that's it. An ounce of prevention is worth a pound of cure. I don't know. He's had a lot of great things, but both of those sort of apply in this situation. So, Haley, if you would be so kind, Haley's our producer, in case you didn't know. Yeah, I know you know Frank, but maybe you could bring up the copy of the book and Frank's, there you go, and Frank's QR code. So if you have your phone out and you're listening to the live stream now, or you're watching it on YouTube or off of my LinkedIn profile, Facebook, you can click the QR code and scan it. And if you want to learn more, you can go to Amazon, it sounds like, and look for the book, How to Do a Proper Policy Review by Frank Campbell. That's great. I'm glad you prepared that, Frank. That makes it easy for the audience. And for the listening audience, because we do have an audio-only group, Frank, if they want to go to your website, can you tell them where they should go for your website, since they didn't?
Thank you, Rick. Yes, my website is stratusfp.com. STRATUS, F like Foxtrot, P like Papa.com. And we work hard to make it an interesting resource for whatever direction you want to look at.
Well, I told you at the top of the show, ladies and gentlemen, we had an interesting one planned for you because Frank was our guest, and we covered a lot of ground in a short amount of time, Frank. I want to thank you for being a guest, and Jason Duncan, thank you for bringing Frank to our attention.
Thank you, Rick. I appreciate your inviting me. It's a pleasure.
To our listening audience, you're a part of Orange County's longest running business talk show and podcast, as well as our guests and me. And I want to thank you for giving us a little bit of your time and attention today. If you're an Orange County entrepreneur like Frank and you want to be a guest on our show, maybe you're a nonprofit leader of an organization here in Orange County, then reach out to me on LinkedIn. If we're not already connected, feel free to give me a connection request. I'm Rick, R-I-C, Franzi, F-R-A-N-Z-I. And mention in the connection request that you're interested in being on the show. Between Haley, our producer of 9 years, and myself, we'll be happy to get you ready. If we're already connected on LinkedIn, then just send me a message. Reach out to me, send me an email. We'll be happy to get you ready to be on the show. I see, Haley, that there's a message from Jason. Maybe you could bring it to the screen as one final. Okay, there's a little more information for Frank's Facebook.
stratusfp.com/free book. Then you can get it for free because you tuned into Rick Franzi's podcast.
Look at that. Everybody wins. And until the next time we have a chance to be together, I hope all of your business decisions will move your organization in a positive direction.